Good morning, guys, and welcome to today's edition of the London Session Open. Today is June 2nd, 2020, and it's 20 minutes until 10 a.m. in London when we're doing this market update. We have about 20 minutes to cover most of the markets, and if you do have any questions, if there's something I have not covered, then you are most welcome just to put it in the chat box. So, looks like this, and you can just say hello, like Stefan just did here. And you can also put a question in if you would like to here. And you might be watching this on YouTube, you might be watching this on Investing Cube, it doesn't really matter. If you want to access, you need to have an account with YouTube, which is free. And that also allows you to subscribe, which I recommend you guys to do. Because over the last 2 weeks, I'm not doing it every day in the morning as I used to do. It's much more irregular as we're trying to sort out a new schedule. And also been experimenting a bit, seeing what kind of content you like. So it's always good to subscribe. It's also very good to follow me on Twitter, because I will usually, if I produce content, I will usually put it there. All right. All right, so we have Stefan here. Good morning to you. We have Marvin as well, and UK Kenny. And Stefan says, I finally closed my dollar CAD short. I got tired of waiting. I'll buy a new car as per your advice. Very good. I'm happy to hear that, Stefan. Yes, buy yourself a new car or buy yourself any new toy. That's what I do sometimes. Well, I try to do that because in the past, what I have done is that I always had a lot of money in the account that you produce profits, and then you think, oh, next year if I leave the money, it's going to be this much, and after that, it's going to be this much. And while all that is true, if we don't reward ourselves during the journey, it becomes frustrating. And then when you do lose money, you think, oh, I should have probably, done something with the money and the profits. And, if you buy something durable, you will remember it. So you'll see, actually, I bought that stuff with the trading. It's good to see that it actually comes to use, because money for the sake of money is, what's the point, really? Okay, let's talk markets. Let's begin. And we're going to begin by taking a look at the Euro versus the USD. So I had a few setups here over the last few days, and the general idea was to sell here. And the market's been so slow moving. So what happened is that we said sell here somewhere, and then we were up with about 100 pip. And then we said sell here. It came down because it was the same level, really. And but my outlook for today is still bearish. It's not bullish yet, and I don't think it's going to be bullish for some time. We need to take out 36.64 really for me to turn bullish or bearish. Yeah, bullish, sorry. And for now, we're moving upwards. And when I was looking at this morning, I said we can probably go up to maybe 13, 14. But from that level, I think the market will stop. So I don't think it's going to trade much higher than that level, and then we'll probably kind of come down lower. So that's what I think is happening, and that's what I would be focusing on. GBP versus the USD. My idea has been to look to buy here, but also to sell here. And we're moving upwards now because most things are going upwards, but we're still in the sell zone. And right now it looks like it's never going to come down. But you'd be surprised how important the trend is. And where can we show this better in the Dow Jones? So this is the Dow Jones, and you remember what I said? Well, I did a video, and I even put it on the thumbnail on YouTube. I said the Dow could decline, but I also said that from a technical perspective, the trend was bullish. And you might remember we were just above the June 15th low, which is this level down here. And let me just change this so we don't confuse people. There we go. And we said the trend is bullish here, and if anything, it should go upwards. And look and behold, it did go upwards. And it's not the first time either. Here, when we first started to hear and learn about the potential second wave in the US, the market also bottomed out nicely. And at that point, from the very low to the high, the market rose with some cool 9%. So COVID-19 and all of that is obviously important, but at the end, the technicals are far more important. And what are the technicals telling us about the Dow Jones today? It's telling us that from a purely risk reward ratio, it's not the optimal time to buy. The optimal time to buy was maybe down here, and then you had a few setups. You can always go a few setups. Like if I go here on the 30-minute, you'll find that this is support and you have some levels here. And I'm working on a new indicator with the help of the team here in Investing Cube and also some external specialists, and we will hopefully bring you a nice indicator that will tell you all these very short-term levels, and hopefully we'll have that ready over the next week or two. Technically it is already ready, it's just waiting for like the legal team to approve things, and we'll do some webinars on the back of that. But yeah, so the short-term trend is bullish, but I usually don't get involved in those short-term moves anymore. Not as young as I used to be, and effectively I rather take the longer term trades and that are safer, because for me what's more important is not to make huge amount of money, is to make money. Whereas, as you know, some 60%, 70% of traders, with some brokers up to 80% of traders lose money, and I want to be in the winning section. So with the winning team, I want to be the winner. That's what I want to be. I just want to make money, not lose. So that's why here I would not be buying. Here is a level where we can book 50% of profits. If we go a bit higher to 26,295, I would probably get out with the rest there. And then if one is looking to buy, then I would be bullish from this level, which is 25,523, all the way down to the low, as long as you don't trade below the low. Here's the German DAX. German DAX is on fire as well. The last very good idea I mentioned to you guys was to buy here. That went fine. And then we've been looking for a pullback, but that pullback never really happened. And what we're dealing with here is a market that is short-term bullish, and we're still within this triangle. And of course, in the very short term, you know, it's not that difficult to figure out that we are at the sales levels. This is where people sold last time. So buying here just because it's going up is not the best time to do it. There are other markets out there. There are in the beginning of breaking out where your risk reward ratio is good. Here, there is no good risk reward ratio. It's a bad risk reward ratio, unless of course you want to be a seller. You could sell here up into that, but we were trading against the trend then. And yes, there are people that are good at trading against the trend, but most people are not good at trading against the trend. So unless you have a proven strategy, then I wouldn't be selling here unless you're booking profits. So what's the game plan here then? What should we be doing? Well, you got some stops here. Oh, that's the trend fighting level. It looks to me we're forming a ascending triangle, which if it rejected here and goes down, we could buy the breakout. The alternative would be to maybe look for a dip to support, and the support area starts here, which is around yesterday's low, so around 12,112. Stops just below here. What else? Gold, crude oil prices. Remember this scenario? We talked about it. We're trading up here. We said it can go down. People are going to want to buy here. This on the 25th of June, and then we had another opportunity on 29th of June to buy here. We're now at the levels. What would I do here? The market moves ridiculously close, so I will book some profits here. I will book 75% of the whole thing, if not 100%. And then if we go down to 38.10, the time trend could be bullish again. Isn't there a short-term bullish trend here? Yeah, of course there is. There's a tiny short-term bullish trend above 38.82. If you really want to get into the nitty-gritty, you can see that you have double bottom and maybe a slide here and then upwards. But again, I don't do that. Hopefully over the next few days I'll have a nice shiny indicator for you that will do that for you, that I've been working with some other people to develop. Some other people that are better than me on the very short term. What else? Gold. All right, here's gold. What a ride. Very, very eventful market where we had a break on June 22nd already. And then you had a push to the upside and you had a strong dip. You could have bought here if you wanted to. And then we moved back to the buy area and we're a bit of profit. Is it like very nice to us? No, not unfortunately not, because it's in an uptrend, no doubt about it. But if you would have bought already at the breakout, like I did. I bought here first time, then we're up a bit, and then went all the way down. So we'd actually be back at entry, and then all the way up, and then almost back at entry. So it's not an easy market to just buy and hold, but ultimately I think we're going to trade upwards. Okay, we covered the main markets. We still have 10 minutes to answer questions, so let me know if you have any questions. Yes, before I forget, daily cases in the US, new record yesterday according to the data from Worldometers, 51,000 cases. Not good to see, but it is what it is. And as far as what I've been reading and seeing online, there's not big changes from the states that are driving the cases upwards. Luckily, we haven't seen the number of deaths to pick up, but we should be there quite soon. Of course, there could have been a change in the relationship, but remember, people get sick and die after 2 weeks. Obviously, the situation is different now because it's younger people that die less. Hospitals hopefully are better prepared. They're not as prepared everywhere, of course, but it is a challenge. Remember this as well, like if you look at a place like the US, healthcare in general is very expensive, and I don't remember, but I saw some silly numbers, like if you get sick in COVID-19, it's like maybe $10,000, something like that, 20,000, depending on what actually happens. So if you actually get it, you have that problem. And how's that gonna affect people? Well, even if you're younger, you're younger than 65, you might still be very careful with how you spend and so on, because if you do get the virus, you might need to foot the bill of some 10 grand or more. So you can still have that economic impact, and the numbers from here up until the next couple of weeks is still going to be good, because we're looking at numbers. The economic data coming out, by the way, from the US is like from the prior month and June. That's the data that's coming out, and that data is improving, no question about that. The question is what's going to happen with the data when they close down again. Okay, all right, so let me see if you guys have any questions. Just gonna check something here. So the data should already have picked up here on the June 24th. Where were we at June 24th here? And so on June 24th, 38,000. So it's going to be interesting to see if the next week, if we see higher numbers or not. Hopefully we don't see higher numbers, and hopefully we can get people safe, and hopefully this comes down. All right, let's see if you guys have any questions. Good morning, Simon. I hope you're doing good. And good morning, Antonio, as well. Good morning. Do you trade the Norwegian kroner? Dollar Norwegian kroner breaking lower? Yes, I do trade the Norwegian kroner sometimes. Doesn't happen too often, but a few times. Maybe I don't even remember trading it this year, but I have traded before. All right, so this is some old channel. This is interesting. Just remember this next time you go bored. So remember this channel we were working with? I don't know if I actually showed you this channel, but it's a channel. You can see how the market was from 2008 to 18 all the way up into recently. The currency markets were actually a bit boring, and you can see how this little channel was very well behaved, and then you got this monster move in currency market. That's a monster move, really, 31%, and you totally blew that channel out of the water. All right, so what's happening here? Well, we're still dealing with some sort of an uptrend, and we have corrected most of this move, but obviously people are getting a bit excited about the market. And what's happening here is that you have a range, as you have clearly identified, and we're breaking lower. There we go. And then you have that level. So this is a rectangle, and you're taking out 1, 2, 3 lows, and we're trying to break lower. So this pattern itself suggests we can go down. Now we haven't really traded lower yet. I mean, we're trying to break, but we haven't really taken out the low here according to the pricing from IDC. So still a bit too early, but hopefully we have a breakdown and we can go down. So the question is, where do we put stops on this one? Probably stop will be just above today's high, somewhere here. We can go on in the 1 hour, get an idea of what we're dealing with here. So what I would actually prefer, but will be better, is if we don't have the breakdown today, rather we go up to 948 and then tomorrow, or maybe later today because of the non-farm payrolls, we break lower. But ideally it goes up and then tomorrow we go down, or on Monday we go down, because that could afford you to maybe have a stop loss at 90.50 or something like that, which would give you a better risk reward ratio. And if you would look here, you would have a stop loss just above the high somewhere. And then if we go down to this level here, you're looking at 1.57. If we reach target, you're looking at 3.36. This is interesting though, as I mentioned this before. This here looks like a 1.88 times risk reward ratio, which it is. But if you're trading with the trend and you're managing the trend good, or you get some decent entries, what happens most of the time is that this should be able to break lower and then it comes up and then it goes down again. So what happens at that point is you can probably take your stop loss and just put it like that. And what happens with the risk reward ratio then? Risk reward ratio is 3.5, and that's a very good risk reward ratio. And that is something I noticed. You'll see that when you trade it many times, because the initial risk reward ratio is about 2 times. But what I noticed in my trades is that I think it was some, I don't remember exactly, but most of the time I was able to reduce the stop. And I remember this very well. If I was risking 60%, like 100 pip stop loss, I was usually able to reduce that initial stop loss with some 40 pips. So only some 60% of the original risk would be there. So 9 like that, and then we need to reduce this to 600 more or less. This is interesting. Sorry. So that's where it would be, and then you get that risk reward ratio, and then people think, and then you forget about that as like an individual trade. Your job as a trader is just to find, hopefully, this is obviously a longer term pattern, so you won't find as many. But in the longer run, your job is to find 100 of these, and then you see the magic in the equity curve afterwards. But you wouldn't focus on one single individual trade. Okay, let's see what's happening. If you have any more questions before we wrap things up. Okay, so we don't have any more questions according to this. We're gonna wrap things up. If you do have any questions for me during the day, let me know. AlexFX is where you can follow me on Twitter. And if you have any questions, let me know. Yes, by the way, we have this one, the Q3 market outlook. You can read it now. You can just download it. Looks like this. It's free. Just note something. I wrote my sections and just in June. And in June, which is one month ago, the likelihood of a second wave was not as high. But it's still interesting to read, and there's some other setups and analysis from the other guys. We have different people here from the ATFX side. We have a guy called Dean from mainland China. We have Martin from Hong Kong. We have these 2 guys writing. We have a guy called Justin. Don't remember from which part, but he's from Asia as well. We have Jessica as well, I think it is this time around. And we have Cameron that works from the London office. So we have quite a good amount of people producing different analysis and views here. And if you're reading the Spanish version, the Latin American version, you can also read about dollar Mexican peso, because ATFX itself has many different companies across the world that use the same name, and pretty much relying on some of the similar infrastructure. But individually, they are independent companies, all of them with their own CEOs. But the benefit is that what we can do is that many of these different other companies have different analysts, and we can pool those together so you can get different views and different trading tactics from different parts of the world. All right, we're going to wrap things up. I want to thank you so much for watching, and I'll see you guys on Monday for the weekly market update. Thank you so much, and have a great day. Bye-bye.